In a previous video, we spoke about buying the entire market. But what if 100% equity or stocks is just a little too aggressive for you? There is technically a dial to adjust the risk level. This is not financial advice, it's for educational purposes only. Think of your portfolio risk like a dial. If you turn it all the way to the right, you're at 100% risk and you're buying the all equity fund. But then if you adjust it just a little bit to the left, you go 80% stocks, 20% bonds for some cushion, and you get ETFs like VGRO from Vanguard or XGRO from BlackRock that are a little bit less riskier because they have bonds to protect you from the volatility. Now, if you crank it a little bit more to the left into the dead center, you would get something like VBAL from Vanguard or XBAL from BlackRock that are 60% stocks and 40% bonds to really balance out the volatility ratio. Now, if you crank the dial further to the left past the middle, you will now be in a more conservative territory where you can buy an ETF like VCNS with Vanguard that would be 60% bonds and then 40% stocks. So it'll be very conservative with very little growth, but less volatility in your portfolio. Of course, if you crank it all the way down to pure safety, you're buying just 100% bonds because you cannot handle the risk or any volatility in your portfolio. And just like the world ETFs, multiple companies like Vanguard, BlackRock, BMO offer these risk-adjusted portfolios that are all in one ETF. Once again, any of these ETFs that I've mentioned can be held in your registered accounts like your TFSA, RRSP, or FHSA, or non-registered accounts that you may hold as well. Any one of these have automatic rebalancing and automatic diversification, depending on which risk tolerance you're looking for. Find your dial or your place on the dial and invest accordingly.